Good morning, good afternoon, good day. Welcome to my weekly market roundup, 7th February 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website, YouTube channel and Twitter page. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the systems I use in my live trading. They are based on these underlying platforms. I'm going to use the same systems today. That was the last slide. Let's continue with the live system. As usual, let's start with the global market review. On Friday, I already had a market roundup that was arranged by Metastock. I covered the global markets in that session also, so I will go through it quickly in today's session. Australian index AXJO, looking at it using the standard weekly daily at a glance template using Q Global on Metastock. The weekly is forming a megaphone pattern. It is at the upper edge of the megaphone pattern. It is more likely that price will retrace from there, or rather pull back from there, then it will go up. It can go up, however, the likelihood of it pulling back is higher. The weekly candle is very bullish in shape and color, and in daily also over longer period it is in an uptrend. But because of the megaphone pattern, I am not going to take any new long trade in Australia market right now. And that is a pattern that will be seen in multiple markets. In Japanese index topics also you can see kind of megaphone pattern, very similar to Australian market. This week's candle is very bullish. Over longer period it is in an uptrend. China's CSI 300 index, little bit weaker than Australia and Japanese markets because this week's candle is not bullish in shape, not bullish in color. Of course, over longer term, it is still in an uptrend, has trendline support. FTSE index UK market, that was the weaker global market that is continuing. It is even weaker than Chinese market. China's backdrop candle color in weekly chart was neutral. Here backdrop color is magenta, bearish. Over longer term, it is still in an uptrend. And Nifty 50, India's index, used to be the strongest of the global markets. It is continuing. This week's candle is very bullish in color and shape. It also has a megaphone pattern. That is why I will avoid buying even in the India market right now. I also showed, and let me show it one more time. If we look at the market internals for the India market, and why I am looking at the India market, I mentioned earlier, India market responds very well to USA market movements. So in India market, is there any weakness in the market breadth? Yes, there is. The important internal advanced decline in the weekly chart, it is clearly rolling over. The same is true for up down volume also. As I mentioned, advanced decline shows the weakness first, the internal weakness, then up down volume, and this is for the entire national exchange of India. Though India market made new all-time high, the internals are clearly weak. This is for the exchange, and if I looked for the broad index Nifty 500, again market breadth studies, there also the advanced decline and up-down volume, they are not reflecting the bullishness of the index itself. That is a cause for concern. Let's now look at the USA market. For that I will use Q Elite on TradeStation. Using the ETFs now, SPY made a new all-time high. However, it also has a megaphone pattern. There were two bearish headwinds in the weekly charts earlier. Daily is clearly bullish but closer to the upper boundary. I will avoid buying usual stocks right now. I may buy instruments that were weaker earlier like gold. We'll have a look at gold after some time, but I'll avoid buying usual stocks right now. The last buying opportunity in stocks would have been at this point when SPY started to go up after hitting the yellow direction line and after displaying the bull release signal. That is my trading style, and many Q traders trading style start to buy at the low points, not after it has gone up for 5 days. It is certainly bullish. QQQ, this doesn't have the megaphone pattern, very bullish in weekly and daily also, close to the upper boundary, and Friday we have a doji candle. Doji candle at all-time high may lead to a pullback. May doesn't mean it will, therefore I am not going to start taking short trades, but there are possibilities, non-negligible possibilities. You may say that market will pull back. We'll keep an eye on that. Russell 2000 ETF IWM, that is the strongest again. Very bullish weekly candle in color and shape. Daily is bullish, too close to the upper boundary. The last buying opportunities came when the traffic light color flipped from red to green. Q has many scans. One of the scans is actually searching for traffic light color flipping from red to green without going through the middle color, yellow color. So you might search for that. In any case, we look at the market ETFs every day, so we could see the color was flipping from bearish to bullish with a bull release signal. That could be a time to start to look for small cap stocks buying opportunities. Now it is too high, not my style to buy after the instrument went up straight for 5 days. And Dia, this is relatively weaker but very bullish. Weaker only because it didn't make a new all-time high. There was bearish headwinds earlier. Multiple market instruments displayed bearish headwinds earlier. You remember that was the time when I took some short trades and I made a profit in all of those trades. Interestingly, right at this point I shared some bullish ideas. All of them also made profit. That is my trading style. I short at swing high, buy at swing low. I don't buy at swing high. That works very well because the risk is minimal. Overall, all the market ETFs are bullish. Now, if I look at the internals though, let's look at the USA market breadth studies. Let's look at the USA major indices first, daily. I'm using the daily calculations to primarily look at the percentage calculations. This percentage of stocks are 50 MA above 200 MA. That is not rolling over yet for the 4 major indices. What are the 4 major indices? Dow Jones, Nasdaq 100, S&P 1500 and S&P 500. Percentage of stocks where 50 MA above 200 MA not rolling over. I mentioned earlier, percentage of stocks above 50 MA already rolled over several days ago. It recovered, but it didn't hit or didn't go above the average line. So it recovered, but it didn't turn bullish yet. And now I have completed the calculation. So you can see even percentage of stocks above 200 MA for Dow Jones, it rolled over and it couldn't regain back to the average line. Nasdaq rolled over but regained. S&P 1500 rolled over but regained the average line. S&P 500 rolled over, recovered but didn't regain the average line. So there is some weakness shown by the percentage MA calculations, at least for some of the indices. Now let's look at new high-low advanced decline up-down volume. We saw Indian market made new all-time high, but the internals are showing clear weakness. For that, I am going to use the weekly interval that shows the weakness better. The daily plot for internals is choppy. This is the same study of market breadth. I'm going to focus on the internals, new high-low advanced decline up-down volume, same major indices, Dow Jones to S&P 500. We can see though the market made new all-time high, both advanced decline and up-down volume, especially up-down volume, if you see here, they are far from reaching earlier high, far from that. And advanced decline is also showing weakness, didn't go anywhere close to the previous peak for all the major indices. That is showing same weakness that we saw in the Indian market. Now let's look at even broader indices, that is NYSE and Nasdaq. This is Nasdaq, the entire index in entire exchange. The up down volume is again showing weakness. Advanced decline is not showing that much weakness here. Nasdaq had been very strong, but still up down volume is showing weakness, and advanced decline didn't reach the previous peak. And if I look at NYSE, here also there is some weakness in the up down volume, some, but to a lesser extent weakness in advanced decline. When the market is making new all-time high, but advanced decline up down volume for major indices and composite indices are not hitting the previous highs. For some of the major indices it is far below the previous highs. That is a divergence, and this is raw divergence. There is no calculation, average calculation on these internals. So that is another reason I am going to not buy many new trades, new long trades. Having said that, let's look at the other market perspectives, starting with the sector industry stock advanced decline. This box says 1 month to 1 day advanced decline breadth. That is bullish. Now everything is green, much more than red. So the last couple of days, the last week's market move was enough to turn all the periods for sector industry as well stock advanced decline to be bullish. There is no weakness here. If we see the sector percentage moves, on Friday all the sectors were up. Over last 2 days also all the sectors were up. Even defensive sectors like real estate, utilities, consumer staples, they were also up on Friday over 2 days also. That may be a sign of exuberance. Usually when defensive sectors go up, non-defensive doesn't, and vice versa, but last couple of days everything went up at new all-time high. Let's look at further detail of the sectors. Over 5-day period also all sectors are up. Over 10-day 9 are up, 2 are down. Over 1 month it was bullish earlier also. Even before this bullish week, the monthly period, 1 month period was bullish already. That is remaining. Now over 10 days 2 sectors are down. Which are they? They are these green bars, industrials and materials. They are not the defensive sectors, real estate, utilities or consumer staples. So if at all we see any weakness over all these periods, it is actually not in the defensive sectors. That is something also we may keep in mind. Doesn't mean the market is bearish, market is very bullish, but there is some weakness in certain sectors, relative weakness you may say. Overall, we have to say the market is very bullish, and if we look at the bucket study now, by the way, if you are seeing the same plot for D1 and D2 during the weekend, then you may not have the latest version. You may please download the latest version. The latest version stores the data more accurately. So we can see D1 versus D2, that is Friday versus Thursday's bucket calculation. Just a few days ago, there were large number of stocks, large percentage of stocks in the lower buckets. Now that has shifted to the bullish side. And between Thursday and Friday, the percentage of stocks above mid bucket has moved from 63% to 69%. So that is bullish. It is not overheated yet. Currently, slightly above 10% of stocks are above the highest bucket, in the highest bucket, greater than 10 bucket. That is not overbought. It can certainly go higher. Bucket is also showing bullishness. Now, if we see the finder picture that shows the balance between bulls and bears, starting with the weekly period, bullish, everything is bullish. All signals 89% bullish, strength 85%, trend continuation 93, and trend reversal 80% bullish. And if I see Friday's period, everything is bullish except reversals. All signals 82% bullish for Friday, strength signals 93%, trend continuation 84% bullish. However, reversals are more bearish than bullish, 61% are bearish. So if the market pulls back, these stocks may give lucrative shorting opportunities. I'm not going to take any short right now, but I'm going to keep an eye on the market. As you have seen last time also, at the top I shorted and came out with profit in a couple of days. At the bottom I bought stocks, came out with a profit. I will review those stocks today. And at the top again, I am now looking for shorts. I am not looking for longs unless it is in instruments like gold. Doesn't mean there are not buying opportunities. Breakout traders are certainly finding many buying opportunities. In the Metastock Market Roundup on Friday, I analyzed some of them using live systems. We may do the same today also. Now coming back to finder analysis, the technical breadth, that is also bullish. Overall very bullish. So all the angles that we saw is bullish. Why am I still reluctant to take many new trades, long trades? Because there are megaphone patterns in multiple global markets and USA markets. The daily charts are near upper boundary and market internals advanced decline up down volume is showing weakness, and I am not willing to risk my money when the instruments are at or near upper boundary. But market is bullish. Bullish doesn't mean I'm going to buy. I'm going to look for low risk opportunities. There may not be so many low risk opportunities now. Now let's look at some of the stocks. Okay, let's look at Megacap top 20. How are they doing? This is a custom index, Megacap top 20. It was moving sideways earlier. It broke out of some of the watermark pivot levels. Over last couple of days, it is outperforming the market. The weekly also broke out of the watermark pivot resistance. Looking at this bullishness, I will be happier if it pulls back somewhat and goes up again, giving me probably a go with flow trend following long trade setup. Right now, if I could trade the Megacap top 20 index, I would not trade it long side because it is near the upper boundary. I will of course not short it because it is bullish. I will be happy if it pulls back and goes up again. That will give me a low risk buying opportunity. Megacap top 20 is also showing strength. Now let's look at some of the stocks that I shared earlier on the long side. Let's go to the traders forum. I shared the ideas under this 360 degrees trading techniques and ideas, and I always share them when I'm looking at them, analyzing them, probably taking the trades. I never shared them after knowing the result. Let's look at this one, STNG. I first discussed STNG in the live market meeting, I think on Wednesday, 27th January, pre-market. And how did I think of buying it? Of course, fundamentals were strong. We can look at that. Fundamentals may be strong even now. My basis of buying the stock, and I mentioned that I did take a long trade. Basis was this trend line supports in both daily and weekly. They work extremely well. What trade setup did I apply in my mind? Bounce trade setup. Q bounce setup has certain requirements on daily chart. There is no requirement on the weekly chart. And bounce setup is the only Q setup that allows me to buy even if the daily candle color is red. And of course on weekly there is no checklist requirement. The requirements are like this. It has to drop sharply and suddenly, come to a pre-existing trendline support. In this case there were multiple trendline supports, and price should go up, close above previous day's high with high activity or pressure. All those conditions were true, so you could take a long trade on this day itself. So I discussed it in the market meeting on 27th Jan. Let's check its fundamentals. It's signing me in. The more you observe the trades that I share, or probably the trades you take using 360 degrees techniques, you will see the buying the low technique with fundamentals being strong and industry being strong works extremely well. This is STNG's fundamental scorecard using Q Vital. Valuation is in the middle, but excellent earnings growth in last 3 quarters. Excellent revenue growth in 3 quarters as well as 3 years. Short squeeze potential. you can see it is steadily going up. Last 10 days it has gone up by 20.8%. Very strong fundamental stock. Even on Friday, 76% of the peer stocks were up. And if we want to see the industry's relative strength, let's check that out using QH. Of course, I shared it some time ago. I don't know whether the industry is strong now. Relatively, the industry is not so strong now, but when I shared it, I think it was strong enough for buying. And another thing is, relatively it may not be so strong, but if you look at the industry percentage over last several periods, it is actually quite bullish. That's why the industry allowed me to buy, and it is strong even now. So it was a 360-degree trend. How is STNG now? Let's find out. I shared it on 27th. Let's check the date again. 27th Jan. Pre-market session. So I shared it based on these days closing. These days pre-market 27th Jan. So if you bought based on my sharing, you could buy the stock somewhere here using fine-tune chart probably. You would put stop just below, let's say even below this long lower tail candle low. Even if you put it that far away, by Friday it has covered much more than the risk distance. Probably 1:2 reward risk ratio, 2:1 reward risk ratio. Now remember, Q technique has a mathematical basis also. That basis requires only 1:1 reward risk ratio. But you will see many trades like this, 360-degree trades like this, they give much more than 1:1 reward risk ratio. So the mathematical basis is met and exceeded. STNG worked out very well, and what I wanted to show, I again bought the stock, and you could, and you probably did also, bought the stock at a swing low. Many people trade breakouts. Why? Because breakouts are easy to locate on the charts, and we have been taught to trade breakouts more than anything else. Whether we are day trader, if somebody is doing intraday trading or swing trading, or even for longer term holding, breakout trades are easy to locate, identify, and take. And there are some very robust techniques also for breakout trading, like IBD technique, certainly very robust. But the more you observe buying the low and compare it with breakouts, I think you will come to realize that the same stocks you are trading with breakout techniques, you could buy a little bit earlier, sometimes a lot earlier, using the go with flow setup, for example, or using the bounce setup in this case. Now, sometimes it is useful to track or walk through a chart. There are certain Q trade setups. If I look back, and I always suggest new Q traders to do this exercise, walk through, open a chart and see when could be the last buying opportunity. And you would see last buying opportunity coming from the right side would have been on this candle. That was a go with flow trend following long setup. If you go to the left further, on this day there was a bounce long trade setup. That is when I shared the idea. If you go back further, there was a go with flow long trade setup on this day. Now all these three trades, go with flow, bounce, go with flow, all of them hit their profit target. Now if I look back, was there any other trade idea using the Q setup? If you go back even to the left of the daily chart, no. There were few bullish flow candles, but they were too close to the upper boundary, doesn't allow us to buy. There was a bullish flow here, but the candle shape was indecisive. that didn't meet the checklist condition. There was a bullish flow here also. However, the stock was still in a downtrend. Same was true for this bullish flow candle. So if you look back the screen width for any chart, any stock, any liquid instrument, not only stock, any liquid instrument, and you try to apply the checklists in mind, you will come to see that if you just apply the Q trade setups, you have ample number of trades and they are doing quite well. And when you are doing this walkthrough, you are just looking at technicals. But you may do that in real life. You may actually take the trades only not using technicals, but also you are going to combine technicals with fundamental industry strength. So in real life, your success rate should be even higher. Whether you are achieving that or not, you can find out from Q diary. And if you are not achieving at least 60% success rate, that is the mathematical requirement for Q systems to be profitable, you will find out from diary why the success rates are not there. So STNG, 3 out of 3 trades that could be taken on the screen width, all were profitable. There was no other trade setups, neither long side nor short side, because it was going up. We wouldn't take any short trade. There was no headwind trade setup. There was no box trade setup, no reversal trade setup on the short side. Only 3 long trades, go with flow, bounce, go with flow, and all of them are profitable. Now let's look at the other trade idea that I shared and I bought also. That was also in the same industry as STNG, but I shared it on a different day. I first talked about it in the weekly market roundup of 30th Jan. STNG I shared on 27th Jan, and this stock DHT I shared on 30th Jan. What was the basis? Again, it was relying on the trend line support, a sudden and sharp drop, stopping at the trend line support, closing higher, bull release signal, that was an extra, and very high volume. The weekly color was magenta, but that is fine. The bounce setup does not have any requirement on the weekly. So that also gave a bounce setup. Let's check out this stock's fundamentals also. In the same industry. So I'm not going to check the industry. The industry was strong. It is still strong. Retrieving. Even stronger, isn't it? STNG was medium valuation and this is undervalued stock, great earnings quality, even better earnings growth, excellent revenue growth, and see the dividend yield 13.4%. When I first shared it, the dividend yield was more than 14%. As the stock went up, dividend yield reduced little bit. Over last 5 days, it went up by more than 11%, steadily going up. This stock I shared on 30th Jan. Let's look at the stock now. DHT. 30th Jan. So I shared the idea based on these days candle. That candle had indecisive shape. So in real life, Q traders will take the position next day using fine-tuned chart. So they will get a fill somewhere here. Even if you place the stop below trend line support, entry price would be somewhere here. By this Friday, again the reward risk ratio was more than 2:1. There is open space above. There would not be any reason to exit full position in such cases, both for STNG and DHT. Now, if you look back again on this chart from the right hand side to the screen width, of course, when you are doing the walkthrough, you may maximize the daily chart. For me, let me use the current screen width. If you see, it was steadily going up, and when it is steadily going up, what is the setup that Q traders are going to use? Go with flow long setup. What is a requirement for that? The bullish flow candles. Now, all these 4 bullish flow candles, the shape was not fully bullish. All of those 4 candles here, here, here and here had upper tail. So you would not take a long trade at the close of those days. You would take the long trade next day using fine-tuned chart, and you would get filled somewhere here. And what would be the stop? Stop is always below the recent low. And you can see for all of those entries, there were pullbacks after entry, but the stop was never hit. It eventually went up. So if you took all those trades not at the close of the bullish flow candle, because it had upper tail for all the 4 days, you would take the long trade next day using fine-tuned chart. In all of those cases, stop was not hit. Before hitting the stop, it went up and hit the upper boundary. So all those 4 trades, even if you thought that it was going to go against you, it didn't. Actually, it hit the profit target. So 1 time, 2 time, 3 time, 4 time, and when I shared the idea 5 times, 5 out of 5 trades were profitable. Now in real life, you would also keep in mind the expected reward risk ratio, and if you used upper boundary as your target, in each of those cases, probably, or at least in all, or maybe 4 of these 5 cases, you take the trade seeing the reward risk ratio was more than 1. In one case, even if you didn't take, that's fine, your success rate would still be 100%. This kind of walkthrough is extremely valuable, and the good thing is the Q checklists are unambiguous. So you don't have to come to a conclusion during walkthrough and in real life you trade otherwise. That is not possible using Q systems because the standard trade setups are unambiguous. Checklists are unambiguous, so you can confidently take the trades. Let's review another stock that I shared, and that was on a low cost biotech. I first talked about it in a webinar and I shared the chart on this day, which was the post date. Let's check this 4 days ago, February 3rd. 3rd February, I did the complete analysis, and this was the chart on 4th February. What trade setup was it? I think all of you know. That is a go with flow, trend following long trade setup. It's not a bounce setup. The requirements for go with flow setup are that there should be a bullish flow in the daily chart. Price should be in an uptrend with higher low, higher high. The weekly has to be bullish. Relative performance has to be bullish. So all those conditions were met. It was close to the upper boundary, but that is fine. We are allowed to take a go with flow trade near upper boundary if the stock was in a downtrend or sideways movement earlier. In that case, we are allowed to take the first trend following long trade even if it is closer to the upper boundary. So this is what I shared before knowing the result again. I never want to share trades or show charts looking back and say, wow, you could make a large profit. But I'll come back to that point after discussing this stock. Let's look at BIOC today. When did I share it again? 4th February. Sorry, 3rd February. 3rd February. 4 days ago, but 3rd February 2021. Let's look at the stock today. 3rd February would be this one. That's the only bullish flow candle. The entry would be at the close of the day. Stop would be below the trend line resistance. Even if you put the stop near the low, below the low of the candle, by Friday's high, you had reward risk ratio more than 1. So if you placed a GTC order at RRR equal to 1, reward risk ratio equal to 1, you would get filled on that exit order also. So again a trade that I shared, at swing low using standard Q trade setup, hit the profit target. Now let's look back again, do the same walkthrough. Now prior to this trend following go with flow long setup, it was not in an uptrend. So if we see cyan color candle, we are not going to try to apply go with flow setup. All the setups are meant for certain market conditions, and go with flow setup is for trend following market. So this is the first go with flow long setup we would have. Before that, what kind of trade could we take? I can see a watermark support, so I could think of taking a box long setup. Box long has certain requirements, that's a sideways market or double top double bottom trade. In this case we had double bottom seen by the watermark support. We had a bull release signal. Then there is another requirement of high activity or pressure at one of these support resistance points. That requirement was not fully satisfied because there was no high activity or pressure at this point, no high activity or pressure at the previous low. Now if I come back here, there was some high activity. Because this trade setup is relying on double bottom or triple bottom, it is okay to have high activity at any of the bottom points. Now if you were not convinced, that is fine, we wouldn't take a trade. So again, if you covered the screen width, the only trade could be here, probably here, but even if you ignore that, only trade was here, there was no other Q trade setup on the screen width, then again 100% of the trades hit the profit target. There was again no short trade setup because it was starting to move up. Could there be any box short setup here? No, because there was no bear release signal. That is a requirement of box short setup. So again for BIOC also 100% of the setups as you walk through made profit, and very importantly, probably even more importantly, 100% of the long trades that I shared at the swing low after market pullback. And in fact, first when I talked about STNG, maybe even DHT, market was still going down. But I chose those two stocks looking at their fundamental industry strength technicals. They made profit. BIOC I shared when market started to go up already. That also hit my profit target or your profit target or Q profit target. Now, I don't like to walk through charts during the webinars and show you could make profit here, make profit here. But what I demonstrated is for an exercise for all the new Q traders, or even if you are experienced Q trader but didn't do that exercise before, you may open any liquid chart that you are trading with Q systems, or even if you are using Q along with other systems, you compare the setups you had with other systems and the entry points you had with Q systems, and what would be your success rate and with how much unambiguity you would be able to take the trades. You will be surprised, I think. Everybody who has done this exercise has seen that it is not difficult to make money if we are disciplined. I may put it that way. Again, the proof is in all the trade ideas that I share before knowing the result. What was the last idea that I shared on my forum? In fact, if I go to Twitter, let's find the post I made on Twitter on gold. Here. A bullish Q analysis on gold. I shared it in pre-market hours. I shared some charts. Let's look at them. And the market was not open yet. Which day? February 5th. February 5th. So before February 5. Before Friday's open. Before Friday's open, I shared the analysis. Let's look at that. I attached several charts, and in this case I was analyzing a commodity and related industry and looking for an entry point. Was I trying to buy breakouts? No. Was I trying to buy swing low? Yes, absolutely. What was the advantage? My risk was very low and I could anticipate a trade successfully again. Let's look at it. This is gold futures pre-market Friday. Futures were already trading. I saw that GC gold futures came to the white direction line and it was starting to go up. It regained the white direction line when I shared it. It also displayed a bull release signal at lower boundary. Lower boundary is usually the lowest point price goes to before recovering at least a bit. Not always. That's not a trading system, just using the lower boundary. But in this case, price came to lower boundary, came to the white direction line, displayed a bull release signal. We don't see the bull release signal on the candle chart because the candle color was still red. So we couldn't apply the box long setup. Weekly came to this level which acted as some kind of resistance earlier, and it had a long lower tail. Not enough bullish, but I was looking more on the daily chart of GC gold futures and expecting a bounce from there, from white direction line, from lower boundary, and with the help of the bull release signal. Then I looked at few other technical charts. This is GLD ETF. It came below the white direction line, came at the lower boundary. You may not be able to see it clearly on this chart. You may check it out later, validate it later on your computer. On Thursday, it came below the white direction line and the market was not open yet, but in pre-market hours, it regained the white direction line. It also had a bull release signal. And in this case, the weekly had a bullish reason. It came to the trend line support, tried to go below that and recovered above the trend line support. So weekly trend lines, just like daily trend lines, work very well. The fact that it regained the trend line was bullish. Okay, here you can see more clearly. I magnified the picture. On Thursday, it had a doji and lower tail. So it was a bullish shape candle. It was below the white direction line, but on Friday pre-market hours, it had a gap up move as of that time, not gap up open. As of that time, it had a gap up and it was above the white direction line. That was gold ETF. Then I looked at gold miners ETF GDX. Here, let's look at the magnifying chart or the bigger chart also, daily chart. On Thursday, it stopped right at the trend line support with a bullish shape candle. Very bullish shape candle, hollow body, long lower tail. And on Friday, as of that time in pre-market, it had a big gap up open. You can see that more clearly here. On Thursday, it stopped at the trend line support with a bullish candle, and in pre-market it had a big gap up. In weekly also it had a watermark support. That was a reason for me to consider taking a long position in gold. Let's see what happened on Friday, and I followed up already with markup, so let's use this chart. This is GLD, the ETF. On Friday, price opened here, somewhere here. This was early range low, this was early range high. Previous day's close was here, previous day's high was here. So it had a gap up. In fact, here it had a gap up open. This was the gap size, not very small. It was gap size, and now I am using Q fine-tuned 10-minute chart. In real life trading, in the morning session, I and Q traders would use 5-minute chart, but to show more number of days on this chart, I am using 10 minutes. So this was the, let me redraw it. This was the gap up open. Then the early range high and low formed. Right at this point, it broke out of early range high. That would be the buy point, as I mentioned here. The buy point would be here. Stop would be just below early range low. What was the technique that I was using? Two, in fact. One is early range breakout technique in an instrument that I already decided to take a long trade based on pre-market analysis of futures and two ETFs, gold futures, gold ETF, gold miners ETF. I already decided. I was not taking the trade based on fine-tuned chart only. I already decided on my direction, and after market open, when the instrument moved in my direction using well-defined and unambiguous technique, I took a low risk entry. Again, my stop was very narrow, so I was comfortable taking the trade. And during the day, it went up enough to cover more than the risk distance. Yes, Fran has a question. To, if we have time, let's spend some time on how to use fine-tuned chart. In fact, this is what I am explaining. Once I already decided to take a long trade, wait for the early range to be formed. This is a Q chart. Why don't we go to the system? Maybe it will be magnified better. Let's look at GLD on Friday. And I have to reconnect. Or I could. TradeStation charts are crisp, so let me use Q Elite on TradeStation. Here I am seeing GLD using 5-minute fine-tune chart. This is Thursday's move. Before the market opened, I already analyzed and shared before knowing the result, that I have a bullish case for gold. Not everybody had a bullish case. Why? Again, you see, most people are waiting for a breakout. But I take breakout sometimes, but I recognize that if I buy swing lows, I have a much better entry point. So that was true for gold also. I was not trying to buy gold at a breakout point. So I decided my long trade based on pre-market analysis. Then I waited for the market to open. It opened with this gap up. Then the early range breakout technique says wait for the early range high, early range low to be formed. In the morning session, use 5-minute interval, and this is 5-minute interval fine tune chart. Take the long when it closes above early range high. For the day, put the stop just below early range low. So this was the risk distance. When to book profit? When the risk distance is covered. So by the time price came here, I think maybe even 2:1 reward risk ratio was achieved, and we could book partial profit at least. Now the question is, would someone hold on to the trade? And there are different ways of answering that. First is, at the close of Friday, was there a Q swing trade setup using daily weekly? Let's look at that. This is GLD using weekly daily at a glance template. As of Friday's close, am I seeing any Q trade setup using the standard 4 setups that we have? The answer is no. There is no Q trade setup. It cannot be go with flow because it is in a downtrend. It has to be one of the reversal setups. One reversal setup is bounce, but bounce requires a trend line support. Okay, I'll come back to that. Okay, bounce requires trend line support. Let me come back to that. What are the other ones? Box. Box requires a bull release signal. Yes, bull release was there, but box also requires the candle color to be yellow. I'm just applying the unambiguous checklist. You may remember the checklist easily. If not, you may print it out. So box setup checklist conditions were not met. Was there a headwind trade setup? No, because headwind requires a headwind signal. Now, why I stopped at bounce is, though there was no trend line support in daily, I already showed in the pre-market analysis that there was a trend line support in weekly. That means the trend line support is there in daily also. Because of the way it is displayed, it is not displaying it. But we know that if the weekly has trend line support, daily also has trend line support. So on Friday at the close, we actually have a bounce from a trend line, price closing above previous day's close. But bounce has another requirement, that is, there should be high bullish pressure or high volume. In fact, very high or extreme high volume, which would be shown by one of these dots. Now, could you apply the bounce setup at Friday's close? I think so. Why? Because this is an ETF. This is not a stock. So ETFs may not have very high, extreme high volume like stocks might have at the bounce point. So when you are trading GLD, or if you are trading SPY, QQQ, IWM, you may be little bit flexible in applying the bounce setup, recognizing that ETFs may not always have the volume that is there in individual stocks at bounce points. But what is the worst you could do? You could say that no, there is no trade setup, and you could book a nice, I think about 2:1 reward risk ratio, certainly greater than 1 reward risk ratio trade in GLD using the pre-market analysis that I did to make the bullish decision. Another thing that I sometimes do, and many Q traders do, I think that's a good idea also, if you traded GLD using the ETF, you had significant profit at this point at the close of the day also. What I mean by significant, greater than risk taken in the trade. So you could close some of the GLD position or maybe even all the GLD position and use part of the money to open an options positions, part of the profit. So even if that options trade becomes zero, you lose all the money on the options trade. And I'm not suggesting buying naked call options. Naked call options buying at price low point is a inefficient choice of instrument. So I'm not suggesting buying naked calls, but you could have other option strategies, short put vertical or long call vertical, or maybe even back spreads. All those strategies have defined risk, and you could use part of the profit to keep a position in GLD. How did I trade it? I in fact took a long position using futures. I don't trade futures all the time, but it is gold, it's not a financial instrument. So I decided to take a futures position in overnight market itself. I didn't have to wait for the market open. Now, what was my stop loss? I decided that if it breached Thursday's low, I had to close the position because I was buying a swing low, but it didn't happen. I had a good profit. I closed some of the lots. I'm holding some of the lots. Am I suggesting futures trading? No, you know already I am not in favor of high leverage instruments. In this case, I took the futures trade only because I wanted to take a position before the market opened. But if I didn't take, I would still be happy to take using the ETF or the futures during market hours. That would also cover my requirement. What is the mathematical requirement again? Very simple. I should have 1:1 reward risk ratio. Now, all these trades that I shared just now, you saw every trade, whether stock or gold ETF, I shared before knowing the result. 100% of them hit the profit target. I received this question earlier in one of the Metastock webinars. What is the success rate? I am reluctant to share that unless I have a number of trades that I shared already on YouTube Live and on my site, and I shared number of trades, they made profit, but I didn't pick and choose. You have access to all my trading ideas. You may go through them, and even better than that, you may do the walkthrough that I suggested. Pick any stock. What is our requirement? Keep the requirement in mind, not unrealistic requirement. Let's look at the requirement. It's very important to keep the expectation reasonable that actually gives higher profit. What is our requirement? Just 60% success rate. What is our reward risk ratio? Just 1:1. Are we achieving that? If not, we have to ask ourselves why not, and the answer will most likely lie in the fact that if we are not achieving that, that is because we are not following the Q trade setups with discipline. Can I make profit without Q setups? Of course I can. There are many other profitable systems, but I am not here to talk about that. There are some very profitable systems. Certainly IBD is one of them. HSI traders also do quite well. Different HSI traders may have different techniques, but those are robust techniques. But Q is also a very robust techniques, and I am comfortable. Many other traders are comfortable because the entry points are low risk. Now I want to look at two more stocks. I know we crossed 1 hour, but let me look at the question from Fran. Why would the entry point be on 7th candle instead of the second on the 5-minute chart? Fine tune is for gold. Let's look at gold. Why would the entry point be on the 7th candle? 1 2 3 4 5 6 7 here? Because this candle was the only candle, the first candle on 5-minute chart fine-tuned template that closed above early range high. Second candle did not close above early range high. It has to close above early range high. That is the answer. So we are using the early range breakout technique for a breakout from the early range. So we need a close above the early range, not just high above early range. We need a close, and then our stop would be just below early range low for that day. If the swing trade was confirmed at the end of the day, we could hold partial position and move stop on the based on stop loss on the daily chart. So this was a profitable trade. Good question, Fran. Thanks for asking. Now I want to look at some stocks. Those are high growth stocks. Now, by the way, how do we find high growth stocks? I know many people like to maintain lists, but there is absolutely no reason to do that, to maintain many lists. But it's of course a question of feeling comfortable. If you wanted, you could do that. But what I suggest, when you are using Q systems, we don't maintain lists. That's my suggestion. At least just use a big list like liquid stocks. Everything is there. Let's carry out a fundamental analysis, and all the lists that we want will probably be derived from the stock scorecard. Let it calculate the stock scorecard. What I am going to do, I am going to use the stock scorecard and the smart buttons to come to various lists in real time. So I don't have to create lists, maintain lists. I may write down on a piece of paper, but any serious trader would also know what he or she is looking for. So you may not even have to write down. So some people may look for high growth stocks. With a single click, you can find that. If you are looking for box stocks, with a few clicks, you can find that. If you are looking for undervalued stocks or stocks with short squeeze or those near earnings date, if you are doing earnings play, everything can be found out easily. Now, there are many buttons. If you are looking for the best candidates, of course, the 3-star, that is both growth and value, you can use that. If you are into undervalued stocks, you can use the undervalue button. If you are into extreme high growth stocks, you may use this lot of money coins button. If you are into box stocks, you can use the smart filters for the quarterly periods and yearly periods. If you are looking for turnaround candidate for earnings growth, you may use these quarterly, yearly filters. If you are looking for improving earnings growth, you may use these filters. If you are looking for short squeeze potential, you may use this, and nearby earnings, you may use this. So if I am looking for extreme earnings growth, click on this button and see what happens. All these stocks have very high earnings growth, much more than what is found from the 3-star. So how you could combine them? Let's refresh the data. Click on 3-star. We already have undervalued stocks with high growth. If we want to make extreme high growth, click the extreme high growth button again. So now we are having undervalued stocks with extreme high growth. Now if I want to find stocks nearby earnings, click the nearby earnings filter. So these are the stocks where earnings is nearby, great valuation, extreme high earnings growth. Now, how to look for trade ideas? Some people look at all the stocks in this list. What are these lists? These are certain lists of interest, and you are looking at them dynamically. You are not saving them anywhere. You are just using one single list, liquid stocks. Now, some people look at all the stocks in the list every day, but more efficient is using real time during market hours or using daily percentage change. Just sort by percentage change. Look at the stocks that are going up. If your technique says only buy stocks that are going up, you may look at stocks that are going up by more than 1%. Just look at them. Now, some people may store, save, and maintain many lists, but I have seen this technique of using only one list, liquid stocks, and then use the smart filters on the stock tab works much more efficiently in terms of time. Now, some people like to look at stocks that are going up over recent periods. So usually during webinars, I'm only talking about this vital panel, but you know, if you go to the right side, you can find stocks that are going up most over last 5 days. Or any period for that matter, from 12 month to real time. So that is a way, again, people try to create lists. You don't need to. If you want to see which stocks are accelerating the most, by the way, for using acceleration on stocks, you may make sure that list is big enough. If only few stocks are there, acceleration is not so meaningful. But if you wanted to find the stocks accelerating the most over 5 day, 2 day, or 1 day maybe in real time will be real time, you can find them. Now some people create lists based on longer period, up to 5 years earnings growth, revenue growth, and the 4 quarters earnings growth, revenue growth. That also you can create from here dynamically. And yet other traders may use the fundamental ratios, different ratios, to look at stock list, maybe high beta stocks or ROE, many fundamental criteria people could use, but those can also be generated. In terms of practical trading, I think this vital panel will give you everything that you would probably need, or I may say 95% of everything that you would need. Now, having said that, let me look at a few high growth stocks that people talk about often. One is ZI, one is DT. Let's look at that. Let's look at them using vital first. ZI, is it? Not found. Okay, let's check out the one easy technique to find out symbols is open a known symbol like QQQ in MetaStock, start typing ZI and it will show. It is zoom info zi.o. Now what I am going to see is, if I walk through the chart from the right hand side to left hand side, when could we buy using Q setup? Now you can see here there was a bullish headwind signal. Whenever a bullish headwind signal comes, you may start to think of buying. Using what setup? Headwind long setup. This particular candle had an upper tail, so the setup would not be met. And I have mentioned many times the first bullish flow after headwind is a possible entry point. So this was the first bullish flow. This was not a go with flow setup because it was not in an uptrend, but I have mentioned that after bullish headwind, the bullish headwind, we couldn't take the trade because it had an upper tail. We could probably take it next day or the next day, or we could take on the first bullish flow day after bullish headwind. If you took that, of course it hit the profit target here. Now let's look at the next opportunity. It went to upper boundary, came to lower boundary. When it came to lower boundary from upper boundary, that is a wild swing, so the uptrend was not intact anymore. Therefore, we could wait for this bullish flow to take the trade, but the uptrend would not be confirmed. If you took it, that would be making profit, but let's ignore that. By the time price came here, then we already have confirmed higher low and price is starting to go up. So this would be the first go with flow long trade setup, and that hit the profit target in a few days. Now after that, price came down again, but it didn't come to the lower boundary. So the uptrend was intact. Next buying opportunity would be here using bullish flow, go with flow setup, or here or here. Now by the time these bullish flows came, the trend line was already there. I think so. Of course, I'm looking at it based on past chart. If the trend line was already there, it would also qualify as a stronger candidate because it would be a go with flow long setup, but also taking the trend line support in mind. If the trend line was there when price came here, then we would also have a bounce setup, but I don't know if the trend line was there at that point. Probably the trend line was drawn by this time. In any case, the go with flow setup here, the go with flow long setup here, and one of these, let's say the first one, all hit profit target before hitting stop loss. Now, how would high growth traders, IBD traders, trade ZI? Again, I have high respect for IBD. IBD is a profitable system and technique, no doubt about that. I'm just explaining that using the same stock, high growth stock in IBD, you could probably buy those stocks using Q unambiguous checklists earlier with very low risk. Each of those entries hit the profit target. Was there any short trade during this period? No, because short trade will need a downtrend for go with flow or one of the other trade setups. There was probably none. Let's look at one more stock that is also a high growth stock, that is DT. By the way, if I check the fundamentals of ZI on Vital, let's see if we would be able to take it based on our fundamental analysis. Okay, the valuation is overvalued, so at current price level we are not able to take it. When price was lower, it could probably be taken in terms of valuation. It is not showing any earnings growth, but it is an IBD stock. Maybe Reuters is not showing the data. Then if earnings growth was there, you would use that as a growth criteria for buying the stock. Currently valuation is higher, not undervalued, but earlier I'm not sure if it was. I'm now looking at the stock historically, so I wouldn't know. Let's look at the next stock, DT, and let's check its fundamentals also. If these are new IPOs, then the earnings growth may not be there, but it could be bought using a theme, or if they are in an industry that is gaining traction. That's something that IBD traders look for, and I also look for. So this stock we could certainly buy in terms of Q Vital fundamentals. It has enough data, valuation is medium, and excellent earnings growth in last 3 quarters, excellent revenue growth also. So you would be able to find this using the stock smart filters. You wouldn't have to create separate list. Just using the smart filters you would be able to locate this stock when it was going up. If it was going up, let's look at DT. Yes, it was going up. Now see here, again the bullish headwind came here. So if the headwind trade setup was applicable, we would buy here, put stop just below the low. The stop was never hit. It would give much more reward than the risk. If we went forward from that date, the first bullish flow here, so first bullish flow would be here, somewhere here. First bullish flow after the bullish headwind would also hit profit target. There was a bullish flow candle here. By that time we had higher low, higher high. It had an upper tail, so you couldn't enter it. If you followed Q guideline on that day, you would take the trade next day. That was a go with flow setup that also hit profit target. So 1 trade, 2 trade, 3 trade hit profit target. There was a bullish flow here, but that was too close to upper boundary. Then a bullish flow here. If you thought the reward risk ratio was acceptable, that also hit profit target. So another trade hit profit target, and another bullish flow came in an uptrend. So again that trade hit profit target here. So here 1, 2, 3, this third one, one of them you have to see whether you would take or not, but the ones that you would have taken, all of them hit profit target. Before that it was moving sideways, so you don't try to apply go with flow long setup. remember, always look at the market condition. So we see go with flow, bullish flow, but we don't try to apply go with flow setup. We try to apply box setup. But in this period, there was no bull release. The only bull release was here. See, the watermark support was there. Then we are looking for a bull release. We are looking for high activity or pressure. Both were present. Now this particular candle had an upper tail, so you take the entry either next day or next day. In any case, our stop would be below recent low. Stop was not hit, so this box long setup also hit the profit target. What is profit target? Reward risk ratio 1. And you may do similar walkthrough going back, whether it is an IBD high growth stock or value stock or anything in between or mixture. These walkthroughs are extremely valuable. Remember to apply the unambiguous checklist, and then you will see that why I make the comment, but you have to see for yourself. Don't rely on me making that comment. If we are disciplined, it is difficult to lose money. It is possible, but it is difficult. Now, if we are losing money, we have to find out from these walkthroughs, and if you are taking real money trades, you may maintain the Q diary to see what is the real reason. All these stocks, whether the IBD stocks, DT, ZI, or the ideas that I shared recently or past month or before that on the forum, they seem to meet the success rate. I am not making astronomical projection. All we need is 60% success rate, and I didn't want to go through many stocks today because the market is bullish, but having the megaphone pattern and the internals are the market internals, new high low, up down volume, not looking bullish enough for me. So I didn't want to share trade ideas, but I wanted to spend the time explaining the technique a bit more so that you may make best use of the system. You have a powerful system, I think, extremely powerful, if I may say so, because it is 100% real time. Whether you are looking at Q Edge, Q Vital, of course, trade stations, Q Radar or Sonar, and even Finder. In fact, the data on the Finder is not moving tick by tick, but the scans are run in real time. So everything is based on real time data. Very powerful system. I wanted each of you, to make best use of the system. And if you are watching the video, you are not using Q systems, that is fine. You have the idea, whatever system you are using, walk through the system, walk through the charts. Hopefully the entry points are unambiguous. Entry rules are unambiguous, exit rules. So you will be able to see what is the success rate. So long as you have 60% success rate, 1:1 risk ratio, you have no reason to lose money. If you are still losing money, you find out from the diary what is going on. Usually you will find it out. The reason will not be in the market, it will be in the system or the technique or the way you are applying them. I went to almost 1.5 hours. Thank you for being with me. It's my pleasure. You being with me makes it worth my time making these videos. I am grateful to each of you for that. Thanks once again. I look forward to seeing you in our next session, that will probably be on Wednesday, 8 a.m. Eastern Standard Time. Have a great weekend. Keep safe, and once again, there is no reason not to make some profit from the market. Therefore, trade profitably. Thank you.